All right, guys. Thanks for being here. Thanks to all of you for joining us for this conversation. Let's kick it off with some introductions. Mina?
Hi, I'm Mina. I lead WorldPay from FIS's Web3 and crypto growth team. And for those that don't know what WorldPay does in this space, we are a payment service provider and we offer fiat on and off ramps into crypto businesses and platforms. And FIS, our parent company, offers back-end infrastructure to various segments of the financial services industry. And we act as a service provider to the industry today, but are just at the cusp of leveraging DLT directly. So I can speak to the audience about how regulation has impacted our ability to do that effectively.
Hi, I'm Perianne Boring. I'm the founder and CEO of the Chamber of Digital Commerce, established in 2014. We're the industry's first and largest trade association representing the Bitcoin and blockchain community. We're headquartered in Washington, D.C. We're fighting for the advancement of this technology in the United States, and we work with policymakers and regulators to serve as a resource to ensure the United States can lead in the further development of this technology globally.
Good afternoon. My name is Dana Syracuse. I've been an attorney in the space since about 2012, first as a regulator, and since 2015 representing companies in the space, many of the leading institutions, custodians, exchanges, asset issuers, working on an array of issues from obtaining licenses, charters, new product development. Lately, a lot in the Lightning space, the custodial space, stablecoin issuance space.
And I'm David Zell. I'm the co-founder of the Bitcoin Policy Institute, which is a think tank studying the future of money. I'm also an advisor to Bitcoin Magazine, and really grateful to be chatting with you guys today. So, as the panel suggests, regulators are putting digital assets in their crosshairs, Bitcoin in particular. Why?
Well, I mean, there's a lot of reasons why. We've been at this for almost a decade, and we as a community have always been in defensive posture when it comes to public policy. 2013 was a pivotal year for Bitcoin. And back then, it was only Bitcoin. You didn't have all these other altcoins. Ethereum hadn't even been created yet. It was all about Bitcoin. But Bitcoin hit some massive scandals. We had Silk Road, we had Liberty Reserve, we had Mt. Gox. And so policymakers have always been very skeptical. And what came out of that was the New York's bit license and other regulations. Fast forward to today, we've had a lot more scandals, less about Bitcoin, more about other things happening in our community. But with a lot of negative headlines, there's been a lot of setbacks, and that's given a lot of ammo to regulators to crack down. So I think that's more of an excuse. I also think the idea of taking control away from centralized entities or from the government doesn't necessarily fit into the vision or the goals for some politicians who believe this stuff should be controlled. I'm very confident we can overcome those because at the end of the day, Bitcoin truly represents American values. What does Bitcoin actually do? It allows people to have ownership and control of their assets, their digital assets, for the first time in history. This is technological progress. It's very difficult to contain technical advancements. Once they're out, people figure it out and they want it. And it's about independence, transparency, equity, inclusion. These are our values as a nation. So I am confident we will overcome where we are today, but we are in a pretty dire situation in Washington, and it's absolutely essential that our community unifies and engages with policymakers to correct these false narratives and make sure we don't stifle innovation here in the United States, because we have much to lose as a country if we do.
Just picking up on that a little bit, I agree with you, but I also think that it depends on what it is that we're talking about. If we're talking about peer-to-peer transmission of Bitcoin, that's one thing. If we're talking about flowing through financial intermediaries, that's another. That starts to pick up various flavors of regulation just as a matter of current law. I think one thing that's really important for the industry to not lose sight of is the amount of collaboration that a lot of regulators have done to date, and that that collaboration, I think, really will help advance the ball.
Great.
Anything to add, Mina?
So I can speak from a Web 2 institutional perspective, and I think Web 2 organizations are trying to figure out how they can build in this space. And I would say there's a strong argument for a big lever for growth in the crypto and Web 3 space in terms of adoption and scale is having Web 2 institutions have the ability to actually leverage this technology natively. And so for WorldPay, for example, we work with large banks all around the world to process money flows for us. And for those that don't know how these money flows work, if you are a consumer and you're purchasing cryptocurrency, for example, from a platform or an exchange, a simplified form of the flow of funds is that fiat moves from your bank account over to a payment processor's bank account over to the merchant. And so we have to work with large banks around the world to service those money flows. And with lack of regulatory guidance, we've seen a lot of those banks revise their appetite on how they want to service the space, which means as a Web 2 organization, it's not just your own appetite from a risk perspective that you need to move forward with. There needs to be regulatory clarity throughout so that third-party processors and participants can also support the flow of funds. So that's one example of where we've seen difficulty or roadblocks in being able to build in this space. But I would say more generally, Web 2 companies may not have the risk appetite or maybe the expertise to be able to build natively. So how we go to market is with partners. And those partners are subject to a lot of scrutiny, especially in the US from the SEC, for example. So if you're going to market with a partner and they might be hit with a Wells notice, for example, that creates a lot of reputational risk for a Web 2 company. So it becomes very difficult for us to be able to find appropriate partners and build a sustainable, scalable solution. So I would say a second issue that we have with lack of regulatory clarity is just being able to partner in this space. And for those companies that do have the expertise to build natively, it's unclear whether that investment will reap long-term rewards if regulators decide to regulate that product out in that particular jurisdiction. So I would say it's really important for us to know what the framework is with which we can assess what we can and cannot do to be able to scale adoption, because I think Web3 targeting retail investors or retail users is going to have little impact compared to if you have, for example, a GSIB that offers a crypto product, and they're not going to be able to do that until regulators identify what is appropriate exchange policy, what is appropriate stablecoin policy. So we hope you guys keep fighting the good fight and give us some clarity on that.
I think there is going to be an update soon. There are pretty significant efforts in Congress to develop comprehensive legislation to build the regulatory framework for digital assets in the United States, and particularly define the SEC and the CFTC's jurisdiction for different types of digital assets. Bitcoin is special in that it has regulatory certainty, it is a commodity, but all other digital assets are kind of in regulatory limbo, and it's unclear, are they in the SEC or the CFTC's jurisdiction? And then you have conflicting statements from the SEC Chairman Gensler, the CFTC Chair Benham, who are both saying very different things. And so for companies that are like, look, we'll follow the rules, we just need to understand who our regulator is. It's a pretty dire situation, and this affects Bitcoin and it affects other companies building on other blockchains. So Congress is building very comprehensive legislative proposals. There's two that are, I think, of kind of most important. You have the Lummis-Gillibrand bill. So Cynthia Lummis will be here with us tomorrow to talk about that. That was introduced in the last Congress, and she's working to reintroduce it in this Congress. And then the House Financial Services Committee and the Ag Committee oversees the CFTC. They are working on a new piece of legislation, and it'll be somewhat comparable to what was built in the Senate, and they're calling it a market infrastructure bill. And again, it'll define where the SEC and the CFTC sits. These are comprehensive legislative proposals, dozens and dozens of pages, outlines in great detail the role of the regulators, regulatory requirements, so on and so forth. We've already spent years building these. They're going to take another several years to build the legislative process to get them ready to be passed into law. This is important work. But we are hearing very soon there is a new bill that's going to be introduced from Congressman Tom Emmer. He's the majority whip. He had, yes, big supporter of our space. He's now serving in a leadership role in the House. And he introduced a bill in the last Congress called the Securities Clarity Act, and we're hearing he will be reintroducing it soon. That bill is about 1 page long. We worked pretty closely with this team to help him with it, and it very quickly just defines the SEC's jurisdiction in this space. It's not a comprehensive regulatory reform, but it does provide what we see as necessary regulatory relief for companies today. So we are seeing progress, and I'm hoping we'll get some news later today on that particular legislation as well.
All right. Dana, I've got a question for you. Since around 2015, debates around which facets of this ecosystem constitute money service businesses have abounded, and for Bitcoin in particular, there's some question, some debate as to whether or not multi-sig providers or lightning node operators, ought to constitute money service businesses. Should these entities, for example, be required to obtain a bit license? So could you, for the audience, kind of give a broad outline of the sort of debate that's happening on this front, and why some people think these entities are MSBs, and why some think they're not?
Yeah, absolutely. So I mean, the sine qua non of are you a money transmitter, are you a money service business, is are you holding assets for the purpose of passing it on to another? So if you're dealing with something like the Lightning Network and a node operator, it's going to depend on what you're doing, what you're holding. Are you holding information and passing that along? Are you holding funds and passing that along? When it comes to something like a multi-sig solution, it becomes a question of, do you have sufficient credentials to move or prevent the movement of the assets? So I think if you're talking about something like multi-sig, people talk about wanting regulatory clarity. There are areas around custody that the law, you could say, is fairly well settled. I think that there are some very interesting questions in the custody space. So starting in 2015, when a lot of these entities first started getting licensed and chartered, this concept of hot and cold storage, hot online, cold offline, but each with its own kind of issues. With a cold storage solution, there is risk of a malicious insider. With a hot storage solution, there's a risk of a cyber incursion. So I think where it really needs to shift to when you're talking about something like MPC, you're talking about something like custody, is where does your solution reside on a continuum of risk? And for that, I don't think that it's difficult for regulators to get a good answer. It's difficult for attorneys to get a good answer because so much of that it's highly technical. I think that to answer some of these questions, there's a really good space for insurance companies to play. So one of my favorite little factoids is that there was no building code in New York City until fire insurers started writing fire insurance policies. The city of New York looked at those fire insurance policies and said, well, if they're requiring X, Y, and Z, we're going to require that. I think you could do something I think there's a similar area in Bitcoin and crypto for insurance companies to play and really kind of define, not just help define not just what is custody, what is not, but also what are good solutions and what are bad solutions.
Yeah. So another question for you guys, there's this idea that there's an anti-crypto army mounting in Washington. I think a lot of that has to do with the blowback and the fallout of FTX and Sam Bankman-Fried's fraud. But more broadly, I think it's fair to say that a large share of the digital asset ecosystem is sort of just scams or obfuscated Ponzi schemes. I mean, we see tokens like Ben token reaching millions of dollars in market capitalization, all while you have things like Bitcoin and stable coins that are advancing American interests, transforming the global economy, and doing a lot of social good. But yeah, I mean, most cryptocurrencies have gone to zero. If you look at the 16,000 that have been created since Bitcoin. So my question is, When you're talking to policymakers, how do you explain the difference between what's a legitimate digital asset project and what's a scam?
I can offer a perspective on that. So I think it's important to decouple cryptocurrency as an asset class with the technology that underlines the cryptocurrency, which is the blockchain. And if you focus on projects that leverage the technology, which I think a lot of financial services firms are doing, because even though in financial services it seems like things are getting simple and easy, that's just at the veneer or the front end of the technology, but the back-end technology has been around sometimes from the 60s and 70s. So in creating legitimacy in what projects are, still protecting retail investor interests, et cetera, you can prove that the technology has real-life use cases. So at WorldPay, for example, we offer settlement to merchants in a number of different currencies, and we launched the ability for merchants to receive settled funds in a stablecoin, particularly USDC, in partnership with Circle. And that allows merchants to receive funds sometimes instantly. And today, if you receive settled funds in fiat, there's a delay in the timing that you get your fiat. So it could be 1 day, 2 days, 3 days, whatever it is. There's been a historical challenge for merchants to receive same-day settled funds, and that creates really stringent working capital challenges for those businesses, especially SMEs, not necessarily enterprises. But if we can move money around the world instantly and a lot cheaper than we do today, I think that there's real value in that use case. And from a payment perspective, using stablecoins for cross-border payments is revolutionary for our industry, because today those funds are very slow to move. They're very cumbersome and expensive for the merchant to receive. So I think when you're speaking to a regulator, there should be leeway for use cases that revolutionize the way money moves around the world, because we do have a currency now that's native to the internet, and we need to regulate that appropriately so that you can offer these solutions at scale and globally as well.
I mean, it opens up a lot of interesting questions. There's frauds in every industry. No industry is immune to bad actors. I think our space has an incredibly impressive track record of rooting out illicit finance and fraudulent players and bad actors. If you just look at the numbers, just not even talking opinions, just fact-based, the UN estimates that illicit finance is anywhere from 2 to 5% of GDP. According to the Chain Analysis annual study, illicit finance or illicit transactions in cryptocurrencies are less than 0.1%. So just proportional percentage of the market cap of crypto or global GDP, way less illicit finance happening in our space because of how the technology works. So I think a lot of this is honestly just an excuse to not embrace technological progress or to protect entrenched interest, and that is not, the right way to go about, about public policy, and it's really holding our space back. And then the other side where I see a lot of doublespeak is you see policymakers and regulators saying, well, we're not comfortable with this, new asset class because there's not sufficient investor protections or consumer protections. Okay, great. Well, how do we do that? By the easiest and the most, logical way of doing so is to bring registered and regulated products to market for investors, particularly retail investors. So then you have to ask yourself, why has the SEC blocked every single attempt to bring a spot Bitcoin ETF to market over the past 10 years? If they really want investor protections, they would bring registered products to market, and they're not. So I think it's really, you've really got to ask yourself what is these underlying reasons, and I think it's more political than anything else.
I agree with a lot of what's been said. I mean, if you look at after the last financial crisis and the billions of dollars in fines that banks paid for OFAC violations, for BSA/AML violations, for safety and soundness violations, it dwarfs what's going on in our industry. I think that there's definitely a need for more comprehensive regulation, but I'll tell you, you look at someplace like New York State, you look at the NYDFS, there's been a comprehensive regulatory regime in place since 2015 with the BIT license, but also with the New York State trust regime, which predates crypto. So the same charter that Gemini has, that Coinbase has, that Standard Custody has, that BitGo has, Franklin Templeton has. Brown Brothers Harriman, it's the same flavor, and it is a regime that exists under the banking law. It requires things like comprehensive board oversight, comprehensive capitalization, bank level reviews. So in a lot of ways, these models, these regulated models do exist already.
All right. Well, as we're sort of winding things down, I think we've talked about the anti-crypto army. We've talked about some of the public policy challenges that Bitcoin faces. I think the most important question is, how do we fight back? What do we do next? So why don't we hear from each of you, starting maybe with you, Dana, then you, Mina, and Perianne, how about you round us out? What do you think the strategy is to fight back in Washington?
I mean, I don't think it's a fight. I don't think it has to be antagonistic. I think that even couching in those rhetorical terms is dangerous. At the end of the day, when you're dealing with an elected, when you're dealing with a regulator, when you're talking to them about, hey, here's what's going on with our industry, you are in many ways asking them to own the risk of regulating that, to own the risk of licensing that, to own the risk of supervising that. And to really kind of get to a meaningful place, there needs to be a dialogue. There needs to be an honesty. I think there needs also to be an acceptance that there will never be a perfect regime, that there will never be perfect regulatory clarity, because the industry is evolving, the use cases are evolving, and reg lag is actually is a real thing that we all kind of just need to accept. So yeah, I think the first thing is to throw out the language of how do we fight back, anti-crypto army, this or that, and really kind of come to it in a spirit of collaboration.
So I would say a couple of things. One is education. So I think having folks that are in the US regulating crypto and Web3, the extent to which they can gain an education from a technical perspective, risk, compliance, legal perspective on what Web2 companies are facing, or even Web3 companies are facing building in this space, would make a difference. I think the second is collaboration. We have exchanges in the space that have been very open to working with regulators on what they're trying to build and seeking approvals early. I think the extent to which the Hill and builders and investors in the space can collaborate and work together is going to make a difference as well. And then the last thing is, I think just market dynamics will be such that there's going to be markets that regulate this the right way, and the right way being giving builders the freedom to actually explore the use cases for this technology. And I think those will outcompete the US eventually if the US is either slow to regulate or regulates in a way that's prohibitive. So I think those economies will just tend to thrive, and then we'll have to have regulators take a second look at what they think is the appropriate policy guidelines or framework for the space.
Yeah, I think education is absolutely key, because so many times people or policymakers who are supporting anti-crypto stuff, they just don't understand it, and someone lobbied them or someone talked to them, they don't really fully comprehend what the implications of that are. So education is something we've seen tremendous progress with at the Chamber over the past 9-ish years. I will say the pro-crypto army, it's bigger and it's more organized, way better, and it's much more sophisticated than the anti-crypto army. I've seen it. I'm on the ground in Washington, D.C. every day. The anti-crypto army, I mean, we are going toe-to-toe with them. Their queen is Senator Elizabeth Warren. She's enemy number one. She is not a friend to our space. She's not a friend to freedom. She's not a friend to innovation. These are things as a community and as a society that we value, and she has completely sold out on her entire career of being that advocate for retail investors, and we need to call that out. And she has an anti-crypto bill. She is lobbying the members of the Senate to introduce it, to get it sponsored, to get traction. Our team is on the ground actively fighting against that bill, and we're fighting it just with education. And guess what we've learned? This bill, it does not have support. We have stalled the introduction of this bill. We've convinced people not to sponsor it because this jeopardizes our American values. So I think fighting the anti-crypto army, first recognize we come up from a position of power because we truly represent what our country values, for one. So we're not backing down. Two, education is absolutely critical. And then three, I think we stop talking about crypto. People don't get it. There's been a lot of like we're in a crisis communication situation. Like people don't understand it. There's a lot of baggage that comes with that particular term. What we should be talking about is what people care about. Our national security, jobs, innovation, economic security. These are things that all parties agree with. We have areas that we agree on. And I think Bitcoin and blockchain technology can advance our national security, can advance our economic security, advance our energy security, and will lead the US into the digital era. And that's what we should be talking about, and that's how we win. And you can also enlist in the pro-crypto army today by joining us at the Chamber of Digital Commerce and supporting important think tanks like David Zell's Bitcoin Policy Institute. Support the people that are on the ground doing this work.
All right. Well, do we want to do quick closing thoughts from Mina and Dana? And then I think Perianne has a special announcement for you guys to close us out.
Yeah, my final thoughts are, I know that the title of this talk is a little aggressive, finding an anti-crypto army. I do think regulation is important, and I think regulation can protect consumers. I just think for the US specifically, we need we need action sooner. 2, we need policy that's not prohibitive. And 3, we need education for the policymakers that are going to build guidelines that are going to last for the sustainable future of Bitcoin. So I'm excited to see the developments that are happening on the Hill this year, and hopefully there's things we can work with, especially from a Web 2 adoption perspective.
No, I agree. I mean, this is systemically important. It is important that, not just crypto as an overall thing, but that Bitcoin continues to thrive, and I'm proud to be a part of it.
This is systemically important. I believe if the United States does not get this right, our national security is in jeopardy. At the end of the day, blockchain technology and Bitcoin is what we are going to use to transfer value in the digital era. We're not going backwards, we're going forwards in terms of progress, and we are falling further behind every day, and for the wrong reasons. The reason we don't have it together, the reason we don't have a legislative framework that supports innovation and adoption of this technology in a responsible way, it comes down to politics at its best and absolute worst. We need to unite, get past all the politicking, and fight for the future of our nation. That's why today we are announcing that we are calling for a digital asset and blockchain technology Solarium Commission. This commission, we're calling on Congress to create it, to bring in our policymakers, regulators, but also us, the actual experts that are working on the technology, the industry as well as academia, to work together to develop a comprehensive approach and recommendations for our government on how to address this technology in the digital age with the goal of advancing and protecting our national security. Again, if we do not get this right, it will impact our standing on the global stage, and Congress must act today. Create a Solarium Commission to build the plan and the framework and develop recommendations from stakeholders to ensure our preeminence in the global age. Our future depends on it. This is what I wake up every day fighting for it, and we appreciate everyone's support and calling for this with your congressman to make sure that the U.S. can lead and doesn't fall behind further in the digital era.
All right. Well, thank you guys so much, and thank you.
Welcome back. Welcome back here. I'm Pete Rizzo, editor of Bitcoin Magazine. We're here again at the Bitcoin Magazine live desk presented by Marathon. Joined once again by special guests, Daniel Prince, Joe Consorti, and John Seth. Guys, we heard negative headlines, setbacks, talking about efforts in Congress to advance digital asset frameworks. Want to start it off there. Did we feel like there's enough efforts in Washington to counter this anti-crypto army that we're hearing about? Joe?
There certainly are efforts, and they're growing, but I'd argue that there aren't enough. I think as Bitcoin continues to mature as an asset, more people, just like David Zell and all the wonderful work that they're doing over at the Bitcoin Policy Institute, have done and will continue to do. I feel more organizations like this will continue to grow and develop, because ultimately it's a game of geographical arbitrage, right? Capital is going to go where there's a better regulatory framework when it comes to Bitcoin. And if policymakers continue down this route, the U.S. won't be the leader. And so I think through time, we're going to get there.
Strong words. Elizabeth Warren, we heard not a friend to freedom, completely sold us out. Daniel, is enough, did you get the feeling enough is being done from the panelists on the stage?
I think what the Bitcoin Policy Institute is doing is absolutely incredible, and it's inspired other people across the pond. There's Bitcoin Policy Institute UK. There's going to be one in Australia. There's going to be one in Canada. This has to keep growing and open sourcing all of the policies, all of the conversations, all of the articles. This is what we do. So anybody listening, if you want to start a policy institute in your country, this is what we do. We have to start educating the grassroots of politics. In the UK, that would be your members of parliament.
But it sounds like this is happening fast. We heard that there's legislation that Elizabeth Warren is trying to introduce. We're trying to actively block it.
Yeah, it's got to start with us. And here's the difference. Their messaging is all over the place. Our messaging is consistent every single time. And that will win. The truth will play out, and people will start listening.
John Seth, your take?
Those are strong words that you just quoted earlier. That was said by Perianne. I'm fairly impressed by her willingness to go out on a ledge like that. I think the best thing the U.S. has going for it, unlike what people say, is that all of our rulers are geriatric, and they're going to die soon, and we're going to replace them with a bunch of people who have had Bitcoin as a part of their life for a majority of their life, and that's not that far off. So, like, the stupid policies that they're proposing right now, they can only last so long until the next generation of lawmakers come in, and we're not that far off. Time is going to force that to occur. Not that I'm wishing that on anybody, but it's just a reality of how the U.S. political infrastructure is, and honestly, it's probably the best thing Bitcoin has going for it.
But if time is on our side, there's still issues today. One more niche issue that we heard about was defining the SEC and CFTC's jurisdiction, right? We've seen these two agencies come out and clash over their territory, defining Bitcoin, of course, as a commodity, but open questions about the rest of the digital asset ecosystem. What did we think about what was said about this topic?
Absolutely. I think that ultimately there needs to be a delineation between Bitcoin and crypto more broadly. There's mass confusion about it. People conflate the two. But I'd like to make it abundantly clear to anyone listening. Bitcoin is this neutral digital commodity money. If it looks like a commodity and sounds like a commodity, chances are it is a commodity, right? Nobody can change that supply schedule. It's closer to a commodity money than anything else, and that's why you've seen that classification shift, whereas crypto is sort of the opportunistic result of 14-plus years of free money since 2008.
But we know that the CFTC, they want jurisdiction over Ethereum, these other digital assets. Daniel, your take?
Again, they're just a mess. I mean, how long before Gensler's no longer the head of the SEC, and then somebody else is going to come on, and then there's going to be all kinds of different policies and different ideas and different takes on it. And as long as we just stay consistent with our message, that's all we need to do. It's too easy.
But to quote the panel, the panelist David Zell, he talked about the large number of digital assets that are scams, in his words, thinly veiled Ponzi schemes. Don't we as Bitcoiners want to see some action there?
They're all just going to die anyway. Yeah, I mean, regulators going to regulate, I suppose, so there's no way we're going to be able to stop them doing that. But as long as they keep coming for Bitcoin, they're going to keep hitting that brick wall.
Other cryptos that are not Bitcoin are securities. I don't think there's a question. I think that time is going to vindicate that position. We've seen it, I've been saying it for a very, very long time now, and time has only gotten other people, regulators have only come closer and closer to that position, and I don't see how we don't fully get there over the next few years.
Bitcoin, the commodity, crypto, the security. Joe, your take?
At the end of the day, guys, positive real interest rates are back. Money is no longer free, and ultimately the dead bodies will float to shore. The companies that can't last, the crypto Ponzi schemes that can't last, they were the first ones to go last March when the Fed hiked rates for the first time. So as the Fed keeps rates elevated, as money is no longer free, more of these cryptos will continue to go the way of the dodo.
Stay with us. As a reminder, you can smash that subscribe button on YouTube or give us a rumble over on Rumble, streaming on both platforms. We'll be right back. Hear all the action at Bitcoin 2023 in Miami, Florida.